Pleasure to be here. I'm gonna be speaking a bit more about the market potential about NFT corporate bonds, but yeah, let me give you a bit more information regarding Credify. Credify essentially is a project which aims to bring forward traditional financial instruments and traditional financial vehicles on-chain. We have tons of experience in terms of credit risk assessment. We have started as a lending and borrowing protocol. However, we have seen the potential of actually bringing other debt instruments on-chain, especially in the form of plain vanilla corporate bonds. So the aim behind them is to actually give financial institutions the opportunity to offer their debt instruments on-chain, and they're backed by their credit portfolios, so they are collateralized. So integrating decentralized finance with traditional financial instruments is our main objective. We are pioneers in the sphere, let's say. It has been already 2.5 years since we're on the market, but this is something new which we're trying to incorporate. And one of the most important initiatives, of course, is the XRPL network, which we want to actually develop a secondary market for such kind of instruments. So it is an interesting betting instrument with fixed maturities. An example would be a bond of 100K with 5% yield. However, it is transferable, so people will be able to actually trade them on the secondary market up until maturity, of course. It is issued and vetted by financial institutions, as I already mentioned, and they are backed by collateral in the form of their credit portfolios. They are going to be released as NFT tranches, and the risk assessment is done on the basis of the already existing credit portfolio. So we are estimating the probability of default on it, and based on that, we estimate the risk-based pricing of the bond as well upon issuance. So semi-annual coupons providing consistent returns, that's what we're looking at. Then there is the tranche activation. Each bond is segmented in several different amounts. So once a bond is issued, once the first tranche is filled, we issue the next one. NFT fractionalization is another aspect of the bonds, because usually in the traditional financial sphere, such kind of bonds are very hard to obtain, let's say, by the retail users, sometimes because of the sheer size of them, especially the tickets, anywhere from 100K to above. Here we can actually utilize from $100 above. Then there is the sales process upon activation, complete sale of the tranches, of course. So what we have estimated already, we have 3 different potential financial institutions which we have already spoken with. They are eager to actually participate in such kind of bond issuance. One of them is small consumer loans orientated, raising around $500,000 at 14% yield. Then there is financial institution which is within the real estate segment. They're looking to raise for around 3.5 million at 11.5%. And then there is a factoring institution which basically offers loans for different companies in order to pay for their inventories, and they're raising around 2 million at 16%. So corporate bonds and derivatives, it's a huge market segment in the traditional financial world. And that's what we're aiming to do with the XRPL, on the XRPL network, is actually develop pools and indices of such kind of instruments. So it's not only Credify's, let's say, issued bonds, but also other such kind of vehicles and instruments, and actually put them into pools, be able to trade them, and of course develop indices on them, so having actually a standardized price approach. Then on the other side, what is important is that this could really help liquidity and leverage, because such kind of instruments, if they are standardized, if they are, let's say, vetted and trusted, you can actually use them as collateral in order to obtain funds or liquidity for your operations as well, but still keep the asset. So this is a very, very big difference between what is out there in the current market and what we're trying to develop. And then, for example, a pool example would be bonds with probability of default for less than 10%, interest rate above 5%, maturity above 10 months. So you can pull them together into baskets and actually trade the actual baskets and pools. And then an index would be an algorithmic investment in pools based on other user deposits, let's say. So these are future developments on our roadmap. In the current case, we're basically issuing the first bonds in the next, let's say, 3 weeks. So use case asset-backed stablecoins and lending protocols for increased liquidity can actually utilize them. Leveraging on low PD and high yield, the bonds for a net profit, let's say. It is an innovative on-chain corporate bond approach, let's say, towards derivatives and plain vanilla bonds. Of course, support collaboration and developing this kind of market is very important for us, and this is exactly why we chose also the XRPL network. And if you have any questions, I would be happy to answer them. Thank you for your time.